recognize any revenue, or I mean any profit or any gross profit, as long as we were not able to collect the entire cost of the product or of the inventory. But in this gross profit realization, we will recognize profit first prior to recording collection pertaining to the total cost. So it is the exact opposite sa ato ang cost recovery method. So the first collections are regarded as realization of gross profit. So if gross profit is fully recovered, all subsequent collections are treated as cost recovery. Okay? So for example, to facilitate proper understanding of these three method of realizing your gross profit, let us use this into an illustration. So for example, we have their simple given. We have a selling price of 100,000, and then we also have a cost of our merchandise, which is 80,000, and a gross profit of 20,000. So obviously we have a gross profit of 20,000. Now for the purpose of computing our realized gross profit under installment sales, it is necessary for us to compute for the gross profit rate. So in this case, to compute for our gross profit rate, we just simply divide our gross profit from our total selling price, which is 20,000 over 100,000. So for the record, our gross profit rate here will be 20%. So in computing for our realized gross profit under installment basis, we will now require gross profit rate, multiply it with any cash collection that we have for a specific month. So for example, we have for 3 months, since again, in this case, there is an installment collection of the total proceeds of 100,000. So let us say for the first month, we were able to collect 15,000. For the second month, we were able to collect 15,000. And on the third month, full settlement of 70,000 is made. So let us now compare the three methods. No? Let us compare the timing on how these methods, or when these methods will recognize the total gross profit of 20,000. So let us say we have here on the first month. So under installment method, guys, on the first month, we collected 15,000. So from that 15,000, 3,000 from that will be recorded as gross profit. So where did we get 3,000, guys? So based on our discussion earlier about installment method, any cash collection received under installment sales method will be regarded as partly gross profit and partly as part of the total cost of the inventory or the merchandise. So in this case, to compute for the gross profit realized for the first month, we simply multiply the gross profit rate with the cash collection. So in this case, under the first month, or in the first month, we were able to collect 15,000 cash and then multiply it by the gross profit rate, which is 20%. So therefore, for the first month, we have a total realized gross profit to be recorded nga 3,000. Okay? And then on the second month, we have collection also of 15,000. So same method, 15,000 times 20% na gross profit rate. So we will also recognize 3,000. And then for the full settlement in the third month, which is collection of 70,000, multiply it by 20% na gross profit rate. So therefore, the realized gross profit for the third month will be 14,000. So in total, after the total installment sales is collected, we can now recognize a total gross profit of 20,000 under installment basis. So we will recognize 3,000 for the first month, 3,000 for the second month, and 14,000 for the third month. Again, these figures are based on their collection made for these specific months, multiplied to the gross profit rate, which is 20%. Now, how about under cost recovery method? Again, under cost recovery method, any cash collections will be used to account the total cost of the merchandise first. And when the total cost of the merchandise is fully exhausted, then subsequent collection will now be accounted as gross profit. So for example, on the first month, we have a collection of 15,000. Diba? We have collection of 15,000 for the first month, second month of 15,000, and the third month of 70,000 also. So in this case, for the first month, the entire 15,000 will be accounted as the total cost, since again the total cost of our merchandise is 80,000. So meaning dapat makolekta sa nato ang 80,000 before ta mag-recognize og gross profit. So for the first month, since 15 pa lang man ato na kolekta, then we will not recognize any gross profit. Same with second month, because if we will accumulate the total collection we have for the first month and second month, it will only total into 30,000. Meaning it is the total cost of the merchandise is not yet fully collected. So therefore, under first and second month, we will not recognize any profit at all or any gross profit. We will only recognize it on the third month, because on the third month there is full settlement already. So that means we already had the payment of 15,000 sa first month, 15,000 also for the second month. So meaning we have a total payment of 30,000 already. So that means ang atoan na lang kinahanglan para ma-exhaust nato ang 80,000 na total cost is 50,000. But take note how much was paid pagka third month. We were able to collect 70,000 in the third month. And ang kulang na lang nato para ma-exhaust nato or makolekta nato ang entire cost of the merchandise is 50,000. So therefore, 70,000 nga cash collection minus na nato og 50,000 para itapak nato sa ato ang total cost, and therefore the remaining 20,000 will be recorded as part of our gross profit. So that means on the third month lang ta mag-recognize og gross profit for 20,000. Again, the total gross profits to be recorded in the entire transaction will still be 20,000. So that is under cost recovery method. On the third method, under gross profit realization, under this, again, we account collections, or we account our first collections as part of our gross profit. So again, in the first month, since we collected cash of 15,000, so automatic 15,000 will be recognized as gross profit. And then pila na lang ang balance atong gross profit. So 20 nga gross profit, and then nanatay na recognize na 15. So therefore, ang first 5,000 nato nga makolekta for the second month will also be recorded as gross profit para ma-exhaust na nato or ma-record na nato ang total gross profit of 20,000. So, in the second month, naman tay total payment nga total collection nga 15,000. So 5,000 of that will be recorded as gross profit and 10,000 will be recorded as cost. And on the third month, we will no longer recognize any gross profit because fully recorded na ang ato ang gross profit of 20,000. Okay? So although the timing are different, no, in recording the gross profit, but the total gross profit to be recorded, regardless whether the entity uses installment method, cost recovery method, or gross profit method, will still be the same. Okay? It's 20,000. Okay, so let's continue. We have here installment accounting. Okay. Under installment sales, let's try to compare it with our regular sales. So in our regular sales, we recognize sales and at the same time cost of sales with our gross profit on the point of sale. But again, under installment sales, your gross profit will be deferred first. We will only recognize gross profit once there is cash collection. So installment sales will be our counterpart for sales. Cost of installment sales will also be the counterpart of our cost of sales. So gross profit from installment sales shall be recognized only upon collection. The following procedures will help us determine the amount of recognized or the amount to be recognized as gross profit. So first, we need to determine the gross profit rate. It is important. because we cannot compute the realized gross profit if we don't have gross profit rate. So we need to determine the GPR first, and then determine the amount collected, and then multiply GPR with the total cash collection to compute for the total realized gross profit for a specific month or for a specific accounting period. Okay, so to compute for our GPR, guys, so we have here our common formula to compute for your GPR. So the standard formula to compute for our GPR is our deferred gross profit over our installment sales. So we have deferred gross profit over our installment sales. We also have an alternative way to compute for our gross profit, where realized gross profit is divided over the total amount collected. Okay, so if um, this standard formula of computing GPR is not applicable, then we can resort with the alternative formula, which is realized gross profit over amount collected. But for simplicity, the computation, we will use here gross profit rates based on sales. But because we have two types of gross profit rates, it's either based on sale or based on cost. Always remember, if it's gross profit based on sales, so 100% is, or your installment sales will be 100%. So si sales ang ato ang 100%. So therefore, if it is 25% based on sales, so your DGP will be 25% and your installment sales will be 100%. Pero kung ang inyong gross profit is based on cost, so your deferred gross profit is 25% and the 100% is your installment or cost of installment. So therefore, your installment sales will be 125,000. So in either cases, the problem might give you gross profit rate based on cost or gross profit based on sales. So you need to properly account that. Okay, we also have here the second component in computing for your realized gross profit, ang ato ang total cash collections. So if the problem would not explicitly give us the total amount of collection, then we have formulas to compute for our collection. So our collection might be computed or may be computed by comparing our beginning installment accounts receivable and our installment accounts receivable end. Okay? So that is our standard formula to compute for our collections. And then if the first formula cannot be applied, so let's proceed with the first alternative, which is realized gross profit over gross profit rate, or realized gross profit, simply divide it by your gross profit rate to compute for your collections. Or in short, you just simply work back the formula in computing for the realized gross profit, which is realized gross profit is equal to cash collection times gross profit rate. Or if the two mentioned formulas cannot be applied, so let's opt with this one. By the way, this third one is just the it's the short term lang aning ikaduha, because DGP beginning minus DGP end. Ang difference ni DGP beginning and DGP end is your realized gross profit man over GPR. So technically, these two are just simply the same. Okay? So, if again, the problem does not give you the total amount of cash collection, then you may use this formula to compute such. And then lastly, guys, to compute for the realized gross profit, again, as used earlier sa pag-compute nato sa gross profit na recognition, gross profit na i-recognize for a specific month or accounting period, we just simply multiply the gross profit rate to our total collections, or simply compare our deferred gross profit beginning or deferred gross profit end. Take note that the amount of collection that must be multiplied by GPR must be the principal amount and do not include the interest collections. So that is very clear that if the total collection includes hybrid payment, meaning it's a combination of interest and payment applicable for principal, what we need to do is to determine how much is applicable to the principal, because that is the only amount which will be multiplied to our gross profit rate to compute for our RGP. In case there is collection from customer who used a non-interest bearing note, the amount to be multiplied must be the present value of the amount, or the amount to be multiplied must be the present value of the amount collected. Hence, exclude the interest component. So, as we all know that non-interest bearing note already includes the interest. So, we need to extract the interest payment from that cash payment to compute for the total to compute for the total cash collection to be multiplied sa ato ang cash collections. Okay? So those are the three important components in computing for our realized gross profit. Now this time, we have here several types of installment sales transactions. We have installment sales of conventional merchandise, installment sales of real estate, which is divided into two by non-dealer or by a dealer. But for discussion purposes, we will focus this time under installment sales of conventional merchandise. The journal entries to record the installment sale transaction are summarized as follows. So we are to recognize the day-to-day transactions, like to record the installment sales, to record the collections, to record the repossessions if there's any, and to record trade-in. But repossessions and trade-in will be discussed in the second part of our video lecture. And then, year-end adjustments to be made also in installment sales will be the setting up of our deferred gross profit, to realize the gross profit, and to record the accounts written off if there's any. Now, to facilitate the further concept of installment sales, let's use this concept into an illustration. For example, we have Feli Sales Corporation, which uses installment sales method which provides installment sales to its customers. Now, we have here for the years 2020 and 2021, but we will account first for year 2020. Now, we have a sales for regular account and for our installment sales. So meaning we have two types of sales. Feli Sales Corporation does allows sale on account, meaning short-term credit, and it also allows installment na sales. So we have here sales of 250,000 for regular, and then we have total installment sales of 100,000, but there is a down payment of 20,000. So therefore, meron na lang tayong 80,000 na installment sales receivable. But the total installment sales nato will be 100,000. Since there's already a down payment of 20,000, so we will have an installment sales receivable of 80,000 na lang. And also, we have here cost of installment sales, both for regular and installment, which is 120 and 60,000 respectively. Now, in this specific case, guys, your total cost of sales is being distinguished between the two types of sales, regular or installment. But in some problems, your cost of sales might be lumped, no? Might be presented as one. So what we need to do if your cost of sales is lumped, you need to separate or you need to distinguish how much from that cost of sales is applicable sa atong installment and pila ang ato ang cost of sales nga applicable sa regular, because we need to compute for the GPR of our installment sales, because GPR again is necessary for us to compute for our gross profit rate. So in this case, we have a total installment sales of 100,000 and then cost of installment sales na 60,000. So therefore, our gross profit is 40,000. And then our gross profit rate will be 40% also, from 40,000 over 100,000. So that 40% will be used later on when we will be computing for our realized gross profit. Now, we also have our data for our collections. We have collections sa atong accounts receivable for our regular sales of 120,000, and then collection for our installment receivable. So this time, we have a total cash collection of 45,000, but it is clearly stipulated in the problem that 26,000 will be applicable to our interest and 19,000 will be applied sa ato ang principal. And then, we also have 50,000 incurred expenses and 1,800 na accrued interest on 2020 sales. So let us prepare journal entries for year 2020 daw. So let us prepare pertinent journal entries that will be recorded in 2020. So again, we have here to record the regular sales. So we don't have any problem with that because it's the usual recording of our sales. So debit to AR, credit sales for 250,000. We need also to recognize the installment sales. So in this case, we have a total installment sales of 100,000. But since we have a cash down payment or cash collected as down payment ng 20,000, so therefore the remaining 80,000 will be accounted as installment accounts receivable 2020. Okay, guys, it's important for us to put 2020 or the year where it is made because there's a chance that in the future, this installment accounts receivable will still be outstanding and it will overlap with other installment accounts receivable in the future. So therefore, we need to put year in order for us to identify on which installment receivable it comes from. So in this case, it is from 2020 sales. And then we also have here the entry to record the cost of sales. So we use perpetual method here. So we have debit to cost of sales for our regular nga 120, cost of installment sales nga 60,000 for our installment sales, and then reduction to our total merchandise inventory of 180,000. And then we also have here the entry to record collection of accounts receivable. So we have debit to cash and credit to accounts receivable for 120,000. The usual pro forma entry nato when we have collections sa atong accounts receivable. And then also to recognize our collection sa atong installment account, take note that we have received a total of 45,000. By the way, this is not 120 but this is 45. We have a total cash collection of 45,000. But again, only 19,000 will be applied sa atong installment accounts receivable 2020 and the 26,000 will be recorded as interest income. And lastly, guys, ang operating expenses. So debit to operating expenses for 50,000, credit to cash. So those are our entries from January to December 31, 2020. Now this time, let's move with the adjusting entries and reversing entries for the year 2020. So the first one, guys, is to recognize our accrued interest. If you have observed earlier that we have a total accrued interest for 2020 sales of 1,800. Since it's already accrued, it means it's already an income. So therefore, we will recognize it. So debit to accrued interest receivable for 1,800 and then debit credit to interest income for 1,800. So after that, guys, we will now set up the deferred gross profit from our installment sales in 2020. So in this case, we have debit to installment sales. So we need to close our installment sales and cost of installment sales towards our deferred gross profit. So we have debit to installment sales since earlier nag-credit man ta dito og installment sales and then nag-debit ta dito og cost of installment sales. So this time, to set up our deferred gross profit, we simply close our installment sales by debiting it and cost of installment sales by crediting it with the respective amounts of 100,000 and 60,000. So from that, we already have a deferred gross profit for 2020 of 40,000. Okay? So this 40,000, guys, will be reduced once natay cash collection. Your deferred gross profit, mugamay siya as long as natay cash collection. So again there, we have our computation of GPR, which is 40%, which I have already talked earlier. And then, to record the realized gross profit, take note, guys, we have a total collection of 39,000. So where is that 39,000 coming from? So that 39,000, so balikan na to ang given. So take note that we have a down payment of 20,000 and we have a principal we have cash collection applicable sa atong principal nga 19,000. So therefore, we have a total cash collection of 39,000 that is applicable sa atong principal. So from that, we have 39,000, multiply it by our gross profit rate ng 40% to compute for our RGP. So therefore, our RGP for 2020, not 2012, 2020 will be 15,600. So as what I have mentioned earlier, that your deferred gross profit will be deducted or will be reduced once there is a realized gross profit. So debit deferred gross profit. So that means nigamay ang atong deferred gross profit. And then we have credit to realized gross profit for 15,600. And then, that same realized gross profit, guys, of 15,600 will be close to our income summary. Meaning, that realized gross profit, that 15,600 out of the 40,000 nga gross profit nato for the entire sale transaction lang ang atuang i-recognize sa atuang income summary or will be reflected in our statement of comprehensive income. So, katong balance nato nga deferred gross profit, which is 40,000 minus 15,600, next time na nato to sila, i-report sa comprehensive income kung ma-realize na nato sila. And then, we also have here our closing entries para sa atong nominal accounts. So, we have here revenues and expenses. So, we have sales of 250,000 para sa atoang regular sales. And then, we also have our interest income of 27,800. So, as a gikan si 27,800, that is from 26,000 earlier. Okay? That is from 26,000 here plus the 1,800 nga accrued for 2020 sales at December 31. So therefore, we have a total interest income of 27,800. And then, close your cost of sales for regular na account, 120,000. And then close also our operating expenses. So, since normal balance aning operating expenses is debit, so pag close nato, we will credit it for 50,000. So, that means we have a balancing figure of 107,800. Or that only means that we have an income from ordinary sales or regular sales ng 107,800. You add back the realized gross profit from our installment sales of 15,600, then therefore your total net income for the year 2020 will be 123,400. Okay? So those are the transactions pertinent for recording for the year 2020. Now this time guys, let's proceed with the most common mga questions about installment sales. So for example, we have here GPR, no? So as mentioned earlier, we were able to compute naman GPR. So how to compute GPR? For computational purposes or for computational na arrangement, because earlier more on entries. So this time, let's prepare it more on computational na format. So in this case, so we have here gross profit divided by installment sales. So we have gross profit of 40,000. That is from our installment sales of 100,000 minus cost of installment sales ng 60,000. So we have gross profit of 40. Divide it by our installment sales of 100,000. So therefore, we have a gross profit rate of 40%. And then we have computation of our realized gross profit. So as mentioned earlier, we have our total collections of 39,000. Simply multiply it by our gross profit rate of 40%. So therefore, our realized gross profit will be 15,600 for the year 2020. And then we have deferred gross profit end for 2020. So as what I have mentioned earlier, this deferred gross profit will reduce as long as there is cash collection. So when the entire installment accounts receivable is collected, that also constitutes that our DGP will already have a balance of zero kung ang atoang total installment accounts receivable will fully be collected. So in this case, natay DGP for 2020 nga 40,000 earlier, less na realize nga gross profit nato for the year nga 15,600. So therefore, ang atong deferred gross profit end for 2020 will be 24,400. And also, another most another common nga ginapangutana sa mga problems will be installment sales receivable end or 2020, or in short ang balance atong installment sales receivable. So in short, we have installment sales 2020 nga 100,000 less down payment nga 20 less collection for our principal nga 16,000, so therefore we have 61,000. Okay? Or in short, the other way to compute for your installment sales receivable is simply DGP end get 24,400, divide it by our gross profit rate of 40%. Okay, this time guys, let's proceed in accounting our 2021 nga mga transactions. So balikan nato ang ato ang problem. So we have here our 2021 transactions. So in 2021 guys, it would give you a bit of complications because um, it will the total installment sales will overlap, meaning you still have a balance of your installment sales for 2020, and then it will overlap your installment sales for 2021. So therefore, you need to properly account all your installment sales from 2020 and your new installment sales for 2021, because in computing for your realized gross profit, you will be using the original you will be using the original real you will be using the original gross profit rate in computing for your realized gross profit. Okay? So in this case, we have for 2021 at a regular sales na 230. We also have a total installment sales of 24 plus 96. I think that is 120,000 in total. And then we also have cost of installment sales na 130,400 and installment na cost of sales of 69,600. So in this case, if we would try to compute for our GPR, it will give us a total gross profit of 120,000 minus 120,000 minus 69,600. So that will give us 50,400 na gross profit. Divide it by our total installment sales na 120,000. So therefore, for 2021, we'll have a gross profit rate of 42%. We'll have a gross profit rate of 42% for 2021. And for 2020, again, we have a gross profit rate of 40%. So that's what I have told you earlier, guys. Nga for 2020 sales, you will use its original gross profit rate, which is 40%. And then for all cash collections pertaining to your cash or installment sales for 2021, in computing for your realized gross profit, you will also use 42,000. So these are your collections. And then your accrued interest for December 31, we have 1,020. And for 2021 sales na 2,250. Okay, so let's proceed to the journal entries for January to December 31 of your year 2021. So we have here the pro forma. Again, so we have this time, let us reverse, no? I-reverse na to ang ato ang interest income that was recorded last year, no? So to reverse it, so debit to interest income of 1,800 and then accrued interest receivable for 1,800. And then, so number 2, to record the regular sales, so debit to AR, credit to sales for 230, same na recording, same na mga pro forma. Now this time, let's proceed right away sa sixth transaction wherein we record the collection of our installment accounts receivable. So we have a total cash collection of 97,000. So asa gikan si 97,000? So that 97,000 guys is from here. Oh, balikan na to. Balikan na to sa problem here. Gikan na siya diri 18 plus 26 plus 31 plus 22. But again, it will be separated based on which year it was made as a sale. So in this case, 26,000 is from our 2020 sales, and then 22,000 is from our 2021 sales. And then that 49,000 guys, that is from the interest na 18,000 for 2020 sales and 31,000 for our 2021 sales. And then, to record our operating expenses, so we have debit operating expenses and then credit cash also for 65,000. So let's proceed with our adjustments and reversing entries if there's any for the year 2021. Okay, so we have here adjustment for our accrued interest. So take note that we have an accrued interest of 1,020 for 2020 sales and 2,250 for 2021 sales. So therefore, our total accrued interest receivable will be 1,020 plus 2,250. So that is 3,270. As gikan si 1,020 and 2,250, it is given sa problem. Okay? And then another is for the setting up of our deferred gross profit for the installment sales happened or made on 2021. Okay? Kato ni siyang sa 2021 nato. So we have installment sales of 120 and then cost of installment sales na 69,600 and deferred gross profit of 50,400. So see deferred gross profit nato guys is the difference from installment sales and our cost of installment sales. So from that we have a gross profit rate of 42%, which we have talked earlier as well, no? Now, this time, let us compute for the realized gross profit. Oh, ito na yung na-mention ko kanina na you need to really take a very careful na na accounting or assessment on which collection that cash or which cash that collection will be applicable or which collection not siya applicable. So in this case, kung applicable siya for 2020 sales, then you use the 40% since GPR na to for 2020 is 40%. And then for 2021, you use 42%. So in this case, nadatay total cash collection for 2020 sales nga 26,000. So 26,000 times 40%, so we have 10,400 realized gross profit for 2020 sales. And then we also have for our 2021 sales, we have 46. So as a gigan si 46, where is that 46,000 coming from? So that's actually from our down payment nga 24,000 and our cash collection applicable for our principal nga 22,000. So that is 46,000. Multiply it with the GPR for that year nga 42,000. So therefore, your total realized gross profit for that sale in 2021 will be 19,320, giving us a total realized gross profit of 29,720. Okay? That realized gross profit again will be close to our income summary. And then to record our nominal accounts, to close our nominal accounts, we also have here sales of 230,000, and then we have also our total interest income of 50,470. Now this time, asa gikan si 50,470 guys. So 50,470 that's from our total interest income earlier nga 18,000 plus 31,000 plus 3,270 minus yung gi-reverse nato. Pila man to atong gi-reverse? Okay, pila to atong gi-reverse guys? 1/8. No, natay gi-reverse nga 1/8. So therefore, ang total interest income nato will be 50,470. And then cost of sales of 130,400. That's cost of sales na siya sa regular sales, and then operating expenses of 65,000. So therefore, we have a net income from regular transactions of 85,070. You add your realized gross profit from your installment sales, so therefore it will give you a total net income for the year 2021 by Feli Sales Corporation of 114,790. Okay, let's also proceed with the most common na mga problems in a computational na format. So again, you have here your GPR. So 5,400 over installment sales, so that's 42%. And then let's compute for the RGP. So as what I have mentioned earlier, we will now have two sets of RGP here. RGP for the 2020 sales and RGP for our 2021 sales. So we have collection pertaining for our principal para sa 2020 sales nato nga 26,000. So that's 40%. So therefore, we recognized realized gross profit of 10,400 from our 2020 sales. And then we also have our cash collection for our 2021 sales for a total of 46,000 multiply to its own GPR nga 42%. So therefore, we have realized gross profit for our 2021 sales. Forgive me, this is 2021, not 2020, of 19,320. So therefore, we have a total realized gross profit nga 29,720 for 2021. Okay? And then pag reach na pudog 2022 ana guys, so matulo na siya kay wala pa man na fully collect nato ang 2020. So tulo na kabuk ang ato ang component sa realized gross profit nato coming 2022 for the 2020, 2021 and the new na realized gross profit for the 2022 if ever. And then, to compute for our deferred gross profit, so we have DGP end 2021. So natay DGP beginning. Asa gikan si DGP beginning. So that DGP beginning of 24,400, that is actually the DGP end for 2020. That is the deferred gross profit end for 2020. So refer the computation earlier. And then, add DGP for this year, for 2021, nga 50,400. So that's the deferred gross profit for this year. This one, 50,400. And then less the total realized gross profit in 2021, which is 29,720. So therefore, our DGP end for 2021 will be 45,080. And then we also have another um, installment sales receivable end. How much is our ending installment receivable end? So meron tayong installment sales beginning na 61,000. Again, this installment sales beginning 61,000, that is your installment sales end last year pagka 2020 katong not yet collected nga portion sa imong installment sales receivable for 2020. So that's 61,000. You add installment sales for 2021, which is 120, and then less or deduct all your cash collections applicable for interest, applicable for principal. So this time we have 26,000 cash collection for 2020 sales applicable para sa atong principal, and then down payment para sa atong 2021 sales nga 24,000, and then collection also for our principal sa 2021 nga 22,000. So therefore, your total installment sales receivable end will be 109,000. Okay. And then our net income for 2021 guys, for computational, no, it will be the format. Same siya atong naka journal entry form. It will give us a net income of 114,790. Okay, let's proceed guys. This time, let's have allocation of our cost of goods sold. Okay, as mentioned earlier guys, that if your cost of goods sold is lumped, meaning it's given at once, you need to compute and determine how much of it is applicable to the regular sales, how much of it will be given to or allocated to your installment sales. So this time, let's discuss the ways on how are we going to allocate our cost of goods sold. So for example, we have here Felipe Company selling merchandise for cash on short-term credit and on installments in all installment sales. So naitulo ka sales na method. So the company employs periodic inventory method in determining cost at the end of 2020. So we have here the details. So we have cash sales of 150, charge sales for 300, and installment sales for 750,000. We also have beginning inventory of 120, purchases of 725, freight in of 30, repossessed merchandise 35,000. Take note, repossessed merchandise, these are items defaulted, therefore taken back by the entity. But the details and further discussion about repossession will be discussed in our part 2 of video lecture in installment sales. And then merchandise inventory end of 130,000. So first things first is to compute for the cost of goods sold muna. So before we allocate cost of goods sold, so we will compute first cost of goods sold. So again, there's no difference ang pag-compute nato sa cost of goods sold. We still use the same pro forma in computing for our cost of goods sold. But this time, we only have the presence of repossessed merchandise if there's any. It will be added to our total net purchases. So we have So we have merchandise inventory of 120 plus net purchases of 790. So we have total cost available for sale na 910,000. So si reprocessed merchandise guys will be again ano na lang for advanced na um details for the processed merchandise. It will be available for sale again. Mabalik siya as our available for sale. So that is why we added it in our total purchases. So we have a total goods available for sale of 910 less merchandise inventory of 130,000. So therefore, we have a total cost of goods sold of 190. This one is 780. That is not 180 but rather 780,000. So kanang 780,000 guys, mo na ang ato ang i-allocate. That will be allocated to the three nga sales method ni entity. Okay, we have here case 1. When no other information is given, the proper allocation of cost of goods sold will be as follows. So if the problem is silent, the status quo will be allocating your cost of goods sold based on the amount. Okay, based on the amount of sales on cash, charge, and in installments. For example, you just create a ratio out of the total amount of sales. So we have 150 for cash, 300 for charge, and then see 750 for installments. So we have 150 over 1.2 or 15 over 120. Multiply it with your total cost of goods sold nga 780,000. So therefore, allocated cost for cash sales will be 97,500, 195 for charge, and 487,500. So from that, guys, we can now compute for the gross profit under installment. So under installment, pila atong gross profit daw. So we have 750 minus 487,500. So natay gross profit nga 262,500 under installment sales. To compute for our GPR, 262,500 divide 750. Because ang problema na to, Dria, guys, if we don't have allocated cost of goods sold for our installment sales, we can't compute for our realized gross profit. So in that case, 35% ang ato ang gross profit rate for installment sales. Again, another case 2, assume that the selling price for the charge sales and installment sales of Felipe Company are higher than cash sales by 20% and 25%. So the respective sales figure must be expressed in terms of the same selling price in order to obtain a valid ratio. So the allocation of cost of goods sold should be based on cash price as presented as follows. So in this case, if their markups are different, so according to the standard, we need to equalize them. Okay, so in this case, our basis is C cash. So therefore, we convert charge and installment based on cash. So in this case, so si 150 ang ato ang basis. So since 120% higher, 20% higher man daw si charge, so we have 300,000 divide 120%. And then 25% higher si installment, so that's 750 divide 1.25 to compute for your adjusted value. So from that we can now compute we can now create a ratio. So that's 150 over 1,000 for cash, 250 over 1,000 for charge, and then 600 over 1,000 ka installment. So from our 780 na total cost of goods sold, 117 will go to cash, 195 will go to charge, and 468 will go to installment. And lastly, where the markup or gross profit percentage on price or sales price is known, the allocation would be simple. Assume that Felipe Company's gross profit rate on selling price is 25% on cash, 35% on charge sales, and 37% on installment sales. So in this case, you just simply use the gross profit of each sales method in allocating your cost of goods sold. So you just simply compute for their respective gross profit. So you have their 150 times 25, 300 times 35, and 750 times 37% to compute for their respective gross profit. And then create a ratio. So we have 37,500 over 420 times 780,000. So cost allocation or cost of goods sold allocated to cash will be 117, 195 for charge, and then 468,000 for installment. Okay, from that, um, If ever daily available ang cost of goods sold, we were able to distribute it na sa different types of sales. So therefore makakompute na pud ta og gross profit rate, and eventually makakompute na og realized gross profit. Okay? So with that, that's the end of our first part in our video lecture, primarily discussing about the computation of deferred gross profit, realized gross profit, or and your gross profit rate. So the succeeding video will be focusing on repossessions and trade-ins. So again, see you on our next video lecture and be safe. Thank you.